Kaj here with Daily Profit Cycle, coming at you with another weekly market update. It's July 7th, 2021, 7:07 as it were. And I've been telling you for the past couple of months during pullbacks that we've experienced in the stock market that it wasn't the end of the bull market that we were experiencing, that record stock market would continue. And in fact, that has been the case with the S&P and NASDAQ continuing to hit new all-time highs, and the energy market continuing to inflate, which I've told you about. Oil now at 2.5-year highs. And the thing everyone's concerned about this week is, and it's one of the things I've been telling you is one of the key indicators, is rates, which is on the screen here, US 10-year yield, as it were, and pulling back to just about 1.3%. So the 10-year bond is yielding just over 1.3%, which is about support, as you'll see that red line I put on the chart there. And so, for the past couple of months, rates have been going up or inflating, and that has kept gold suppressed and has allowed other things to inflate, like energy prices and commodity prices and real estate prices, to be sure. And I've been telling you about how to harness that inflation in your account by owning copper stocks and energy stocks, oil and gas explorers, for example. And I've also been sort of trying to be a voice of reason during the sell-offs we experienced in January, February, March, May, and June. And here we are now halfway through the year in July. And I think we're at the beginning of sort of the next cycle, or the next rotation, because the rates are a big one. And so here's what I'm going to say today. There's a lot of key indicators in the market that I watch and that I talk to you about. Bonds, obviously, one of them. Dollar, another one. Volatility is another big one. And obviously gold prices and stock market levels. And so here we have a big one, rates starting to break down. Hasn't officially broken down through support yet. We'll see where it closes this week, but certainly is right at support. And as you'll see those bond rates coming down, we've seen gold start to tick up just a little bit. It was down below 1775, for example, and has ticked back up now to over 1800 as those rates have ticked down. But other key indicators haven't broken down yet. Copper prices still elevated, oil prices still elevated, stock prices still elevated. And so the sky isn't falling yet. It might be starting to descend just a bit. And so I think that's the message for this week, is start thinking about getting a bit defensive. Start, if you haven't already, thinking about or pecking away at gold stocks once again, which have been out of favor for almost a year now, really, since gold hit its record prices late last summer, August of 2020. And then I guess start taking a look at defensive sectors, which I'm doing in premium publications this week. In fact, in Foundational Profits, we're taking a look at real estate, because if you look at like the sectors of the S&P, for example, over the past year, you'll see that real estate has been like the second or third worst performing sector over the past year. But over the past 3 months, it's the second or third best performing. And so defensive sectors like real estate starting to, at least as evidenced by the stock market, tick up. Of course, housing prices have been inflated in the actual real estate market for some time now. And then not buying them yet, but another one to look at would be utilities as a defensive sector. But definitely time, I think, to start looking at gold a bit more closely again, as not just gold prices, go back up over 1800, but it's summertime, which means drilling in many locales in the Northern Hemisphere results and catalysts coming out. Producers have had a year of production and elevated prices over 1,700. Their balance sheets look good. They've increased their dividends. They're going to have to place their reserves. And so markets go in cycles. And I was telling you last September, I was selling gold stocks and then got long energy in November and December. And I think we might be at the precipice of another rotation again. It's a light summer volume, of course. So we have to keep that in mind when looking at the indicators. People are going on vacation, including myself. You won't get an update video from me next week. How about when I get back at this desk? Those are the things that I'll be picking back up on and looking at to sort of seek direction for this second half of 2021. And I'll deliver you my thoughts in the next weekly video updates. Nick Hodge signing off for Daily Profit Cycle.